Good morning. Welcome to Stock Market Today. It's Monday, December 14th, 2020, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at Dan Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. Follow along with this show. Get daily stock ideas to consider. Hits your inbox every trading day before the market opens. Hope everybody had a great weekend. It's Monday. Let's get back into it. So U.S. equities finished mixed on Friday, well off the worst levels of the session. Major indices, except for the Russell 2000, saw a weekly loss after rallying in 4 of the past 5 weeks. On the day, energy, financials, and materials lagged. Comm services, thank you, Disney, consumer staples, and industrials outperformed. Treasuries were stronger across the curve. The dollar was weaker against the yen, but stronger against the euro. Gold was up 30 basis points. Crude oil closed down 40 basis points, but did post its 6th consecutive weekly rise. So again, on the day, comm services, staples, industrials, ed utilities, and REITs to the list of sectors that were higher. Energy, fins, materials, healthcare, staples, and tech, discretionary and tech were lower on the day. As we get to the desk this morning, S&P futures are up 60 basis points on the heels of an Asian session that was mixed overnight. China, Japan, and Australia outperformed, while Hong Kong, Taiwan, and South Korea lagged. European equities seeing a good start to the week after coming under some pressure last week. Treasuries are weaker once again with the curve steepening. Dollar weaker on the major crosses. Gold down 80 basis points, crude oil up 1.1% after again finishing higher for a 6th consecutive week last week. So that's the framework as we get going on a Monday morning that starts out with a little bit of a pullback from record highs, but small caps keep the momentum. Again, small caps were higher by over 1% on the week last week, bucking the trend that we saw in SPY and QQQ. But bigger picture, nothing has changed from a structural standpoint. SPY still has support at 360, then 340 below that. If we break 340, we get into a choppy zone with the key area being 320. For the Qs, 260 is the key level, but in the near term, 280 is important. IWM 170 and then 160 are the levels to watch. I still believe that as long as we're above 340, SPY has upside to $413. So you can kind of see it here. Last week, we talked about the potential for a false breakout here in the Qs. You can see we're still fighting with that breakout level. We'll see if this morning we can get back above those September highs. We're kind of dancing with that level now after a brief breakout. As bulls, you definitely do not want to see that end up being a false breakout. However, we have learned that breadth and participation are broadening, right? So the market has continued to grind higher, even as the Qs were under pressure. So, ideally you want everybody working together, right? The boat goes faster when everybody's rowing in the same direction. So we'll continue to watch that and see how it plays out. And realistically, this is the last kind of full week of trading for the year. We'll start to get into the holiday season now. So maybe that becomes into a play, certainly from a liquidity standpoint, but we'll be watching. Let's hit our market in a minute now. What are we writing about in the note today for our clients? Well, stocks closed lower to end the week. SPY and Q, however, as we do our work over the weekend, SPY and QQQ see their ratings turn bullish from neutral this week. Dollar and treasuries remain under pressure, and that's interesting because those are safe haven or haven assets. So the fact that they're under pressure as stocks are rallying, I would argue, is a bullish confirmation. Same goes for gold, which is stuck between support and resistance. Oil holds the breakout level. We'll take a look at that chart a little bit later on in the show. And as I said earlier, futures do point to a higher open here today. Let's take a look at the major indices now from a power bar perspective. The Dow was higher on Friday by 10 basis points. Bull-bear ratio is still at 4-1. S&P 500 loses 16 bips, 123 to 51. Bulls to bears there. NASDAQ down 22 basis points, 18 to 10. Bulls to bears. Small caps slight underperformer, losing 0.5%. 805 to 136. Bulls to bears on the ratio. Bonds upticked on the day, sending yields lower. And according to the Chaikin Power Bar, small cap stocks and large cap stocks are strongly bullish. Let's hit our stock of the day now. What are we highlighting as a potential idea or the type of name that we want to be focused on here in the closing weeks of the year? Steris, this is a healthcare equipment stock. It does have a bullish rating. Trend is strong. above the rising long-term trend line, which is coming into play and has acted as support on recent pullbacks. Industry is strong as well. As we take a look at the structure from the bottom up, we can see the green bar all the way over there in December. That's our bullish rating, outperforming the market. Now, we'd like to see the intensity of outperformance pick up, but it does remain an outperformer relative to the SPY. Stock is oversold within the context of its uptrend, our overbought, oversold indicator, in an oversold position, while Chaikin money flow is solidly bullish. Do see some pretty solid support around the 170 mark, call it 170 to 180, if you will. But this is certainly a stock that is of interest. Types of setups that we want to see here. Nice uptrend consolidation. Few ways to play it. Obviously, the oversold condition here makes it somewhat compelling for those who wait for the breakouts. You have a pretty clearly defined resistance level, and if we were to break above that, that could potentially lead to further upside as well. So a couple different ways to slice this one up, but it's an interesting looking name highlighted here for you today, highlighted in my note to clients, which will be going out this morning. Taking a look at the sector tracker now, the movement of the major sectors over the last 5 days. Energy, the only one at the top of the list, not the only one at the top of the list, the only one that's green over the past 5 days of trading. Comms, utilities, and staples, call those your outperformers over the past week. Industrials, healthcare, and discretionary are middle of the road. Materials, tech, fins, and REITs at the bottom of the list. Kind of a weird board here, I guess, is what I would call it. I guess with the pullback later in the week, your more defensive utilities and staples did step up. Comms had a great day on Friday, thanks to the big ramp up in Disney on the back of their Disney Plus subscriber numbers and outlook. We'll talk about that a little bit later on. Our industry in focus, this is random, folks. This is automatically generated, and then I analyze it for you in real time. It's oil and gas equipment and services. Been an outperformer over the past 6 months, leading the S&P by 14.75%. 7-0 on the bull-bear ratio makes it very strong. It's currently ranked number 4 of 21 subsectors, having moved down 1 slot over the past week. So ProPetro, National Oil, Well, Varco, and Select Energy are very bullish, and bullish respectively, as holdings of this ETF that has an interesting structure. Now, we've talked about this. I can be proactive in the things I talk about, obviously, but portions of this that are in that email that's auto-generated, I analyze for you in real time. So let's take a look. XES, bullish ETF rating, strong trend above our rising long-term trend line. Maybe we can call it a little bit extended here in the near term as it hugs the upper volatility band and trades into those interim highs from June. But what we're interested in is the personality change that we've been highlighting for the past couple of weeks. Bullish stock outperforming, close to overbought with bullish money flow, bullish ETF rather. I did give you the 7 stocks that do have a bullish rating that are holdings of the fund. So these are stocks that might make sense to take a look at if you are digging in on the recent trend of outperformance within the energy space. These are some names that might be compelling if the setup is there for your style and time frame, as well as your risk profile. So certainly an area where we want to be paying attention and doing some work. Now, we've been talking about it, right? And we'll continue to monitor these trends, whether it extends or begins to pull back, but we're going to keep an eye on it. Obviously, it's something we've been talking a lot about over the past couple of weeks. Let's hit our trending names now. Yesterday's or Friday's S&P movers and shakers, our gainers and losers. Disney tax on 13.6%. Sub numbers at Disney Plus raised in the near term as well as out through 2024. Also announced that they are increasing prices for the service. I mean, I can tell you, I use Disney Plus. I have 2 daughters. A $1 a month price increase is probably not something that's going to get me to cancel. So I'd imagine I'm not unique in that situation. So Disney Plus rallying on that update. Etsy didn't see anything company specific, up 2.8%. EFX caught an upgrade at Stifel to send that stock higher 2.5%. UPS, one of the companies that will support vaccine distribution, higher by 2.5%. Bio provided an outlook through 2023. Investors were happy with what they heard there. Stock higher by 2.25%. On the loser side of the board, Qualcomm, I guess the big news within the tech supply chain that really shouldn't have been a surprise. Apple is going to start to bring production of their modems in-house. And now they bought that modem business from Intel last year, which at the time obviously gave rise to speculation that Qualcomm was at risk as a content provider within Apple. But news last week that Apple was in fact working on their own modem sends Qualcomm lower by 7.3%. Expedia caught a downgrade on the 10th. And then yesterday, there's a headline that they were being removed from the NASDAQ 100. Not sure. Obviously, that was out yesterday. So probably didn't impact trading on Friday when the stock was down 5.7%. American Airlines downgraded at Deutsche Bank, sends that stock lower by 5.2%. Royal Caribbean, nothing company specific there, down 5%. Borg Warner, a bearish stock, down 4.6%. Didn't see anything company specific news. Some of the highlights that we were highlighted later last week about battery regulations in Europe maybe weighing on the stock, but Borg Warner down 4.6% on the day. Let's talk about the cross-asset trends, right? We looked at the major equity markets here in the U.S. You know them. We've talked about them. The structure is unchanged. But let's dig in across asset classes, see what the message of the market is. Gold is stuck between support and resistance. Now, I could draw the lines, right? You have solid support at around the 160, 165 level. Resistance starts to come into play between at around 180. Didn't want to crowd the chart here. I would say the 50-day and 200-day moving averages suffice to show the story of a product that's stuck between support and resistance, all while the RSI appears to be in the process of shifting to bearish ranges, right? We went from, solidly becoming overbought or numerous times becoming overbought to now the indicator having a hard time maintaining above the 50 mark. That's a shift in momentum that's playing out as the stock or the price of the fund has been under pressure. Now, on a relative basis, we've broken down against stocks. So if we think about the message of the market and if we think of gold as a safe haven asset, obviously the fact that they're underperforming gives us information about the risk appetite of investors and, some asset allocation decisions that might be coming into play. But from an absolute standpoint, stuck between support and resistance, I think you need to see a move above 180 to really get excited here that this nascent downtrend in gold is reversing. The dollar is under pressure as well. US dollar kind of trading here at the lows of the year. Really interesting to me because the correlation is remaining intact, but the correlation is broken down with gold, right? Normally we talk about the fact that the gold and the dollar move inversely, but what I think right now is happening is the fact that they're both being viewed as haven assets, right? The dollar spiked hard into the early days of COVID. And then as the market bottomed, the dollar topped, and then the dollar has been breaking lower or trending lower ever since. And that's played out as the equity markets have been strong. And other risk assets have been strong as well. You can look at things like high yield bonds. You can look at things like fallen angels. In the fixed income market, you can look at the base metals, right? Kind of a picture of a more risk on type environment, or signs of investors pricing in a better economic environment. So that's kind of an interesting dynamic that's playing out as the dollar tests the lows of the year. So it's something we've been saying for a while that investors want to keep an eye on. So if you were kind of up in the air on equity positioning, the breakdown in the dollar was something that could have given you a heads up that equity prices and risk assets in general were about to move higher, kind of closer to oversold here in the near term. And then again, I talked about this on Friday. We'll talk about it again. I think it's worth re-highlighting. IPO window remains open here for equities, right? This speaks to risk. We saw the Airbnb IPO. We saw the DoorDash IPO. So this is a fund. It doesn't necessarily hold those two stocks right away, but you get a sense for how investors are thinking about things. ETF solidly above its 200-day moving average in a move that's confirmed by momentum and a fund that is outperforming. So I just wanted to highlight that again today because we had another high-profile IPO last week as well. So let's take Chaikin Analytics for a test drive. Head over to chaikinanalytics.com/test drive. Sign up for a free 14-day trial. You get my note every day, Mark Chaikin's note every Sunday. Thanks for taking the time to be with me today. I'll be back tomorrow.